Panel on managing global LNG supply and demand dynamics. My name is Vandana Hari. I am the founder and CEO of Vanda Insights. We provide global oil market macros. And with me today, I have what I would call a perfect composition of a panel to discuss the very, very exciting times that are now on the cusp in the global gas and LNG markets. And in a moment, I will tell you why I am so excited about it, and I'm sure these four gentlemen are as well. We have, starting from my left, Mr. Akshay Kumar, Petronet, India's largest LNG buyer. Ronan Andrew Barry, ExxonMobil, upstream anchored LNG super major. Mr. Izumi Kai of JERA, which is Japan's largest power generator and world's biggest LNG buyer. And Ronan Beskant, Total Energy is a major portfolio LNG player. So those of you here who are already in gas and LNG markets will agree with me that we have a perfect composition here. Why am I so excited? Well, we heard a lot of excitement and plans and aspirations and targets around India's gas plans yesterday. Of course, India is not alone. This part of the world, especially the emerging market economies in Asia that are generally described as energy hungry, are all looking towards natural gas. And some of the figures that I just want to throw out there is that we are at the doorstep of a major LNG supply wave. The figures I have with me is about 35 to 37 million metric tons of LNG supply coming on stream this year alone, which is about 8% of global LNG supply. And over the 4 years from 2027 to 2030, another 135 or 137 million metric tons coming on stream. So with that, very, very excited to have you four gentlemen on the panel. Thank you very much for making the time. Andrew, I'd like to start with you.
For sure, and it's an absolute pleasure to be in Goa this week, and what a fantastic conference, what a fantastic facility. Certainly a significant upgrade from where we were 2 years ago here in Goa, and so it's fantastic to be back. You mentioned about the additional supply that's coming on over the next few years, and we can all see that, and the projects are progressing, and our own projects are a part of that, which we're very excited about. I think, from our perspective, from ExxonMobil's perspective, we are very bullish about the demand for LNG over the coming decades. And I think, in fact, we're one of the most bullish when you look at third-party estimates and other company estimates. And there's many reasons for that. We believe very much that the way that natural gas can partner with renewables, the way that it's fungible, the way that it can replace alternative fuels makes it a very attractive during this period. And so our forecast itself is that between now and 2050 will around double the LNG demand in the market. And so you mentioned a figure, I think it was around 40% increase that we expect to see.
And I have a related question for you on that as well. So we saw a wave between 2015 and 2020 as well.
Yes.
How would you distinguish between that wave, especially when it comes to supply and demand keeping in step with each other and supply not overshooting demand, because we saw what happened with that in the 2015 to 2020 wave. So how do you see it different this time?
Yeah, it's a very good point. And when you look at 2015 to 2020, the LNG supply/demand rose about 50%. And so the numbers are pretty similar from a percentage basis to what we saw back then. I think what makes us very confident about the longer term demand for LNG is that we see that there, even in the base case, there is a lot of latent demand that can become unlocked with additional supply that comes on. And India is a fantastic example of that, right? I mean, when you look at the gas-fired power generation which has been constructed here in India, there's more than 20 gigawatts of capacity, and the utilisation is down in the 30% range. You've got over 50 MTA of regas capacity that's been built, and the utilisation of that is still quite low. And so as supply comes online, there is this latent demand that we're going to see a response to. And we saw that in 2015 to 2020. What's happened over this, what I would say is a unique period of time where we had these very significant increases in prices that did hold back the demand growth. And even as you look at the international spot prices over this winter, they've moderated a lot, but as supply comes on, we see that there's going to be a good amount of demand response from that.
Okay, so with the supply and demand dynamic, a lot of the composition, the structure of the market is also changing in very interesting ways. And Ronan, I'd like to come to you on that. Portfolio players. So they are increasingly sitting between producers and end users. I personally see that as a good thing. How do you see this structurally shifting the power, the risk allocation within the market? And you are in an excellent position to see both sides as well of how the buyers are responding to this shift in structure and how the producers are seeing it.
Yeah, thank you for the for the question, and thank you for the invitation to participate to this convention. Incredible to see how big India is when you're coming to Goa. Interesting, maybe to start up with is I'd like to qualify a little bit what's a portfolio player. There are plenty of different types in a market. For me, the portfolio player is someone that will bring to the customer geographical diversity and integration along the chain. In the world we live in, security of supply is coming back at the top of the agenda. Price is paramount, no doubt about that. But the customer, they want the LNG to be delivered. We are going in this industry and in this world from a crisis to another one. You're talking about Ukraine invasion, you're talking about COVID, you're talking about Panama drought, which blocked the Panama Canal for a while. There is always something happening, and it's becoming incredibly challenging for both the seller and the buyer to navigate. And that's where a portfolio player like us is coming. We bring that geographical diversity. We produce in 11 plants. We are exposed to different markets. We can offer diversity of index to the customer. So I think we should not see portfolio players as only trading portfolio. I think it goes further than that. The trading part is bringing a lot of value to the industry. It's bringing liquidity, which facilitates the management of the risk. But when you look at the big portfolio player, for example, here my neighbor, Gera, is a big portfolio. They're coming from the buyer side, and they have integrated all along the chain. We are coming from the seller side, and we have integrated down the chain. So I think that's what is important today is for a customer, they see the portfolio player as someone that will deliver the molecule no matter what.
Thank you for that. And as Izumi, JERA brings a very interesting perspective just by the sheer heft it has in the industry and the buying power as well. I'd like to get some perspective from you as a purchaser of LNG. We also hear a lot of changes happening in the LNG contract structure, and you have a very good insight into how IPPs, independent power producers, are looking at the opportunities that are coming their way. So talk to us a little bit about, from a buyers, importers, and IPP perspective, what are your aspirations? What are you looking for things to change in the market?
Thank you very much. First of all, I'm pleased to attend this conference, and I'd like to share with you what we have experienced and also we are thinking about for the future. So from JERA's perspective, we supply about 30% of entire JERA's electricity demand based on the thermal power generation. So we purchase about 35 million ton per annum of LNG, which is critical to secure necessary volumes and also flexibility as well as price competitiveness. So historically, we needed to make sure stable supply, but also recently, due to the change in the market condition in Japan, such as nuclear resumption, renewable introduction, energy efficiency. So we need to manage the uncertainty of the future demand. So more and more flexible LNG, like a FOB contract, including shipping arrangement by ourselves, are quite important. But beyond Japan, we are, as a IPP investor, as well as a terminal potential investor, we are considering how to utilize our portfolio beyond Japan. And the country, the situation in Asia differs. For example, in Southeast Asian countries, such as Vietnam, Thailand, Indonesia, Philippines, so they are all facing the issues of declining domestic gas, while electricity demand or energy demand is expected to continue to increase. So such countries, they are used to use gas, but switching from gas to relatively expensive LNG is not an easy job. So it is important from IPP investors' perspective in such Asian countries, we need to make sure whether respective country or energy players can commit for a long term based on the long-term procurement as well as a long-term offtake of electricity. So that's a typical situation in Asia. But when it comes to India, as explained earlier, I understand the huge potential of LNG import over the next 5 to 10 years. It could easily exceed 100 million ton per annum. And although the global LNG demand will be double, India's percentage will be much greater than the current situation. So therefore, how India can achieve this stable import, securing long-term LNG procurement, that's critical. But from potential IPP investment perspective in India, that is relatively small in my understanding, because gas demand, majority will be for city gas distribution as well as supply to refineries. But towards 2050, depend on some statistics. I mean, the projection about 1 terawatt of the 1,000 megawatt of power generation demand is expected in India, and about 4% will be natural gas. So that's not small. 4% itself sounds small, but 4% of 1 terawatt is quite significant. So whether such a potential IPP, including increasing the plant load factor of existing gas-fired generation, is critical. So therefore, in any case, long-term commitment of this off-taking of natural gas, regasified LNG, or power offtake will be important. That's my understanding.
Yes, and great segue for my question for Akshay. Let's stay on the topic of gas in India and for power production. I think it's very well known that LNG affordability is a binding constraint as for power sector's use of gas in India. At what price range do you think LNG can genuinely scale in the power sector in India?
Yeah. So first of all, good morning to my distinguished fellow panelists and wonderful audience. This is truly an honor to be the part of leadership panel at India Energy Week 2026 and discussing very important topics of how to balance the demand and supply, particularly for balancing the energy growth of the country and in particular and for the world. And as we know that everybody is looking towards India for increase of LNG consumptions particularly. Yesterday in the opening session, we must have heard our Honorable Prime Minister mentioning that by 2030, government is targeting to increase the natural gas share by 15%. So that itself translates into almost increasing more than 3 times the present consumption of natural gas in the country. And as we know that we have a limited domestic availability of the natural gas, today we are able to meet 50% domestic and 50% import in form of LNG. But going forward, if we have to go 15% in primary energy mix, the LNG volume is going to more than 100 million ton, definitely, if we have to achieve this 15%. And presently we are consuming around 25 to 27 million ton. So there is going to be a substantial increase. But what are the challenges we are facing to consume this large volume of LNG? Entire world is struggling this energy trilemma of security, affordability, sustainability, and India is also in that web how to come out with this trilemma. On infrastructure part, that is the making the accessibility to the consumers, we are moving quite nicely. We are developing a lot of infrastructures to reach to the consumers where we can consume to that extent LNG. Even the terminal expansion is happening. Right now we have a 52.5 million ton capacity, but we are utilizing only 50%. So we can increase the utilization in the existing terminal itself, but going forward in coming 3 to 4 years, we are adding further 20 million tons of regas capacity. And the transmission and distribution networks is expanded to each and every nook and corner of the India to cover almost 100% population. So almost $60 billion investment is going on in infrastructure developments for reach of this natural gas. But the major challenge, we are facing the affordability, and we hope that this good news, what you told that around 33 million tons is coming in this year, the LNG capacity. Our information is that in coming 3 years' time, almost 160 to 180 million tons of LNG is being added in the international market. Majorly, US is leading, 70 million tons we are hearing, then Qatar, and even the Canada and other countries also adding. So LNG is going to come in the market, and we expect that the volatility which we faced in the past 3 to 4 years, particularly during the COVID period and then subsequently the Ukraine-Russia war, which led to the increase of price to unprecedented $80 per MMBTU, which nobody would have expected. That has jolted the confidence of the consumer, and we are struggling to convince the consumer that such shocks may not come in the future. Yeah. So that is the need of the hour, that this volatility is not good for anybody, whether it is for producers, suppliers, or consumers. So we expect that this addition is going to stabilize the prices. And you ask that what price will be the good for increasing the power consumptions. As we know that India has already got 27 gigawatt of installed gas-based power plant. That itself can consume more than 25 million ton per annum of natural gas. But hardly 20 to 25% capacity is being utilized just because of the prices, where that price is not affordable by these power producers to compete with the alternate fuel energy available in the country. So going forward, we hope that that will be the major trigger for maximizing the utilization of LNG once the prices are in the affordable range to these power producers.
Can I put you on the spot a little bit, Akshay? Just if you can give us a number, dollars per MMBTU, or a range where it becomes comfortable I'm sure nobody in the audience will hold you to that. Just an estimate.
I always struggle to work out a single number, and always I fail because at different point of time this number is changing, and it all depends upon the alternate fuels what is available in the market. Now we are looking LNG at least to compete with the liquid fuel, not with the renewable, and probably not with the coal. Yeah, it will be extremely difficult and maybe too much expectation to look for that it is going to replace the coal with the price of LNG. But the liquid fuel, there is a huge market, and one is the transport sectors. In transport sector, we have a huge potential for the LNG. Our estimate is that even the 4 to 4.5 lakhs, 450,000 long-haul trucks, if it is converted on the LNG, that itself will consume 10 to 12 million tons per annum of LNG. And that is quite doable. There is no technological issues. Only the infrastructure need to be developed, and we are on the track. People are putting a lot of infrastructure. So that is the one area where we can maximize the LNG use in the country. Second, what we talk CGD network is being developed, and majority of the fuel in the CGD network is the liquid fuel, whether it is LPG or if you go to the commercial or industrial, it will be the furnace oil, diesels, all those things, which our expectation is if the cost competitiveness with LNG is there, that can be easily replaced, which will maximize the use of LNG in the Indian scenario. Coming to the coal replacement, as we know that we also do import a lot of coals for the power generations. And if you ask me the single number, I will just try to guess, may
Please
not
do.
be the correct. Anything around $6 to $7.
Okay.
Yeah.
Thank you.
For MMBTU.
That's what I was going after.
Yeah.
Thank
so
you.
that may work quite comfortable for the power generators.
Wonderful.
And which will improve quite large consumption of LNG in the market.
Wonderful.
So,
Andrew, I see you smiling. So,
I thought you did a very good job in answering that.
So obviously, cost competitiveness, as Akshay mentions, is big. But from your perch, you also have great insights into the ecosystem of India. So what else do you think India needs to put in place in terms of the entire ecosystem to leverage to the most the upcoming wave of supply?
Yeah, and I think Mr. Singh did a really good job in sort of answering, the key sort of dynamics in the marketplace. And the one that he did mention that we also agree there is significant growth opportunity is that LNG to transportation. I think the numbers, and Mr. Singh, you'll probably have better numbers than me, but I think there's like less than 1,000 heavy-duty trucks in India that are LNG powered trucks. In China, it's about 1 million. And if you look back over China's growth in that over the last 10 or so years, it has been extraordinary. And it's been driven by a number of different factors, primarily around regulatory support from the government, where they, particularly from an environmental perspective, as Mr. Singh described, that LNG in transportation has the advantage on the environmental side, and then also can compete versus the liquid fuel. And so I think when you think about the ideal solution for energy for a particular consumer is where you can have something that's cheaper and more environmentally friendly. And if you can have that combination, it's a real winner. So if you reflect on what China has done, the opportunity space, and what India can follow, and then you look back at, well, what has India done in this type of environment that has been very successful, and it is on the light vehicles with the CNG. And so the policies that India put in place that really helped with significant growth that has been seen in the CNG space, and again has helped from an environmental perspective, you can see that that potential can be duplicated in the heavy-duty trucks. And so we see great potential, particularly in that area. And then, I think Mr. Singh talked well about the other opportunities in the power generation space, in the petrochemical space, and in the CGT space. So a lot of opportunity, but certainly the one that stands out for us is in the transportation.
Thank you. Ronan, staying on the same theme of India's priority on supply security, so basically reliability of LNG supply and of course cost effectiveness, what do you see in terms of that India can do to build an LNG value chain that ticks the boxes on reliability and cost effectiveness?
Yeah, I think we are quite bullish about LNG and gas in India. There is absolutely no doubt that it's going to play a huge role in the energy mix. It's feeding the energy transition. The ball is really rolling in India. When you look at it, India is already the fourth largest LNG importer in the world, and the prices are still quite high, because if we want basically the gas to develop further, obviously there is a big question, as it was put forward by Mr. Singh, about the affordability of the molecules. Today we sit, let's say, about $10 per MBTU, and the consumption of LNG in India is increasing, and it's allowed by quite a rapid development of the infrastructure. There is a lot of regasification capacity available, so it allows Indian customers to capture very quickly molecules if they need it. So price remain above what they were pre-COVID, but they are far less than what they used to be in 22, 23, where we experienced that massive increase that led to an immediate reduction of LNG supply to India. If you remember, between 21 and 22, I think the reduction was about 17 or 20%. So it's extremely reactive. But with all that supply that is coming to the market from the US, from Middle East, from Mozambique, we should expect the gas to allow to boost demand in the country. Beyond price, again, it's participating to the decarbonization of the industry. That's why for us as a company, the two pillars in India for operation, they're renewables. We're generating 10 gigawatt already of renewable in India. We expect to grow this to 18 gigawatt by 2030, and together with this, we expect to increase significantly our share of the market. And I think our Indian partners have already understood the role of the value of gas integration, LNG integration. You look at BPCL, ONGC, and Oil India. They have collectively they own 30% of Mozambique LNG. Mozambique LNG is a 13 million ton per annum plant, like a huge investment, about $20 billion, located 5,000 kilometers from India. It's 7-day sailing time. So I think with time flies, but like people have already taken the steps to build that LNG chain, like to have a reliable LNG supply to India. The infrastructure is there, the LNG integration is there, and it's combining with the rest of the energy mix. So we think that all the pieces of the puzzle are already there.
Already in place. Izumi-san, the price sensitivity to LNG, certainly power sector, is a theme across this region, across Asia. Of course, Japan and Korea are probably exceptions. Where do you see, if prices become, let's say, get into the sweet spot and we get what Mr. Akshay is hoping for. Where do you see gas unlocking the potential in the power sector? Will it be in baseload generation or peak shaving? How do you see this playing out in the power sector in the price-sensitive part of Asia?
Yes, so again, even within Asia, even within Southeast Asia, the situation is slightly different, not the same, right? So we need to think about the tailor-made approach for each country. So, for example, Vietnam, they have a government plan to develop 16 or 17 LNG power project from north to south by 2030. That's the official plan, but that's not. To be frank, it's not realistic considering the procurement of gas turbine, transformer, etc. Even LNG supply is abundant. Downstream infrastructure development is also very critical. So, such countries requires base load supply as well as middle load as well as the peak load. So, for base load, replacing the coal generation, that is also one of the potential lowers. And the other one is, of course, to manage the intermittency of renewables. So gas-fired generation is, due to the flexibility nature of the plant, it can be introduced effectively. And on the other hand, for example, India, as I mentioned earlier, power generation, gas-fired generation may have a relatively small increase compared against other laws. But I think whether that is used for base load or middle load, and whether that is a little bit expensive or not, how each government or how each utilities or IPP developers trying to secure stable generation or stable supply of gas, and also maybe from big picture perspective, stable energy system management, that is important. So if, for example, in India, we see more and more 500 gigawatt of renewables in 5 years, and even the base load coal, the generation output may need to be adjusted. So we may even consider coal plus battery, for example, so that renewable can be fully maximized, and after the evening or early morning before sunrise is such stored electricity could be used to make sure coal-fired generation can continue generation, but part of the electricity can be stored for the release when needed. So, we need to think about gas load as a base power, middle power, as well as coal generation in consideration of increasing renewable generation capacities.
Indeed. So you don't see coal's share dramatically shrinking anytime, do you? Let's say looking beyond this decade in this part of the world?
So in reality, for example, in Southeast Asia, Philippines and Vietnam, and Indonesia, they rely heavily on coal. So they're trying to reduce the reliance on coal, at least try to stop the new coal-fired generation development. But for example, what is happening in the Philippines is they want to introduce more LNG, but in addition to the price, the affordability part, it's the difficulty in securing the equipment. So therefore, and this is influenced partially by the increasing electricity demand globally. Even the developed countries such as the United States, Japan, due to for example, AI data center development, power demand is increasing and resulting in the competition in sourcing such a gas turbine and transformer, etc. So it's not realistic for such price-sensitive Southeast Asian countries to introduce sizable amount of gas-fired generation on a greenfield basis.
Indeed.
So therefore, they cannot help by relying on coal generation. But we need to think about how to consider lowering the emission, even new coal is introduced, maybe higher efficient coal or potential combination with ammonia combustion, etc. And maybe in the future, even gas will combine with hydrogen, so that as a whole, emission can be reduced towards 2050 or beyond.
Yeah, thank you for that.
Yeah.
Akshay, I come back to you for the last word on another very interesting dynamic of the market, especially from India's perspective, which is the share or the mix of term contracts versus spot contracts. So how do you see spot, medium term and long term? In the LNG world, we've talked about 25 and 30-year contracts is how it started. How do you see this playing out for India? What would be your preference in terms of the tenure of contracts?
Yeah. So, first of all, just a small correction. In 2019-20, India imported almost 26 million tons of LNG. And then the COVID started, and there was a drastic reduction in the LNG import, and it went down as low as 19 million tons in 2022. So from 26 in 1920, now last year we have come to 27 in 5 years. So the net effect of COVID and the Ukraine war and the high volatility of the LNG prices, that caused a lot of demand destructions in the country. And going forward, we expect that the confidence building with the consumers is happening. And the India could be saved during this volatile period because of the very large contracts on long term. We were having almost 80% on long term, main with the Qatars and my other friends, ExxonMobil, that they maintained the supply without any disruptions, even though prices were going $35, $40, $50, supplying on the long-term basis. And that saved the country for the main demand in the fertilizer sector, that is, and CGDs. That is the two major sectors which require a stable supply of the natural gas. So going forward, for any country, security of supply is equally important, and you need to have a long-term contract for the base load requirements. And we should have some cushion to play with when you get the opportunity of such drastic reductions, and then you mix up the two volumes and manage the portfolio. So my view would be not go totally on the spot, not go totally on the long terms, but have a right mix. And the right mix, we have analyzed all the consuming countries across the world, and we could find that for all consuming nations, at least they maintain 60 to 70% on the long terms. They never go 100% on the long terms, and they keep some cushion for the spot prices, which helps the country in some volatile conditions. And if the prices are very high, you don't consume it and manage the things by efficiency and by whatever, as the Europe did, that they reduced the temperature from 25 degree to 15 degree to save 15% energy consumption.
Yeah.
So in case of crisis, you can look for that one.
Yeah.
So, and going forward, you know that India energy consumption is 1/3 of global average. We have 18% of globe populations, but we only consume 6% of overall energy consumed in the world. So seeing our GDP growth and going forward, there is a huge requirement of energy. So it is not the small increment, it will be quantum increase in the energy in the country. And I think all form of energy will be required in India.
Absolutely.
Yeah.
On those words, we were having so much fun. We ran out of time just too quickly. I hope you found this informative. Please join me in thanking this illustrious panel. Thank you, gentlemen.
Thank you. Thank you.